Have you ever watched one of those YouTube videos that say, to pay less tax legally, just register a company instead of being a sole proprietor? Yeah, I've seen them too. And honestly, my first thought was, that can't be right for Nigeria. Because in Nigeria, as an individual, you actually get about 21% Consolidated Relief Allowance. That's a CRA, which you can only claim if you're a human person, not a company. This is the big advantage of individuals under the old law, or should I say current law, since we are still under the old tax law till the end of this year. This CRA relief is in addition to your business expenses. So think about it. You run a small salon, a catering business, or you're a freelancer, and the government is saying, oh, you're earning income, take 21% off everything you've earned for yourself before you pay any tax. That's gross income. As a sole proprietor, you can claim all your business expenses, rent, supplies, transportation, and still enjoy your CRA relief. But if you run the same business as a company, that 21% relief disappears. And unless your company is structured in a way that you don't pay any personal tax at all, an individual who is a sole proprietor or the owner of a business name almost always wins in tax optimization under the current system. That's why across Nigeria, sole proprietors dominate our business space. Everywhere you turn, it's one-man, one-woman businesses with business names outnumbering limited liability companies. Because honestly, it just makes sense, tax-wise and simplicity-wise. But all that is about to change. The new tax laws coming into effect 1st January 2026 are going to retire these old benefits. This means the comfort zone that many small business owners have enjoyed under the old tax system is ending. We're moving toward a system that's going to close some of these gaps. And depending on your setup, it could mean you'll either pay more tax or you finally start doing things more formally. And that's why it's so important to understand where we're coming from before we get to where we're going. Here's a simple breakdown of what Nigeria's old tax system has looked like for years. Let's use a bakery as an example. Say your bakery made 3 million naira in profit. If that bakery is registered as a company, you'll pay a flat company income tax and between 20% and 30% depending on your size. That's about 600,000 to 900,000 naira in tax. And remember, companies also have to file annual returns and meet stricter compliance rules. But if you run that same bakery as an individual, maybe under a business name, you often end up paying less tax than the company version of the same business. Why? Because as an individual, you can claim CRA, and your tax is based on progressive tax brackets, not a flat rate. That means you're taxed step by step, a little more only as your income increases, and not on your entire income at the higher rate, which is a common misconception. Here's what those brackets currently look like. First 300,000 naira at 7%, next 300,000 naira at 11%, next 500,000 naira at 15%, next 500,000 naira at 19%, next 1.6 million at 21%, and anything above 3.2 million at 24%. Now let's do the math with that 3 million naira your bakery made in profit. Let's start by removing the CRA. The law says your CRA is in two parts. First, 200,000 naira, or 1% of your total income, whichever is higher. Then you add 20% of that same income. So if your income is 3 million, 1% of 3 million is 30,000. But 200,000 is higher, so we use 200,000 naira. Next, 20% of 3 million is 600,000 naira. Now add those together. 200,000 plus 600,000 equals 800,000. That 800,000 naira is your CRA, your tax-free amount. So if you earned 3 million naira, you subtract 800,000 naira from it. That leaves 2.2 million naira as your taxable income, the part the government will calculate your tax from. Then apply the brackets. You will pay a tax of 7% for the first 300,000 naira you made, which is 21,000. Next 300,000 is taxed at 11%, which is 33,000. Next 500,000 at 15%, which is 75,000. Next 500,000 at 19%, which is 95,000. And for the remaining 600,000 at 21%, which is 126,000, giving us a total of 350,000 naira only. As you can see, for many small business owners, the old system was actually more favorable to individuals than to companies. And that's exactly what we'll miss the most with the new tax laws, that flexibility and generous reliefs that individuals have long enjoyed. So before January 2026 arrives, every business owner needs to understand what's changing, how those changes affect your kind of business, and what you should start doing now to avoid unpleasant surprises next year. In the next video, we'll break down the new tax laws, especially the new progressive tax brackets for individuals, and how companies' income tax will change under the new system. Trust me, you'll want to see that one. If you found this helpful, like the video, subscribe, and turn on the bell icon, because by the time we're done with this tax series, you'll understand Nigeria's new tax laws better, like most accountants. And you're not just subscribing to a channel, you're joining a movement of people who are pulling back the curtain on the business strategies and tools for wealth creation, like avoiding paying more tax legally. See you in the next deal.